Okay, let's take a look at GBPUSD from December 11th. So this was sent out, and I said I would wait for confirmation. Okay, so let's have a look at why we picked this zone out. This was a very simple trend break setup here. So I'm on the 15-minute time frame. There is a trend. I defined that trend by drawing this trend line. And one of the best setups that I like to trade is when we get a break of trend, because what happens is the market tends to pull back to the demand area that created the impulse that broke out of the trend, which is here. That's what validated the zone. So the next step is once we go into our zone, we wait for our confirmation. I drop down to the 5-minute time frame. And from here, I wait until I get any sort of momentum confirmation, which I got just now here on that blue candle. And this would be my entry right there. Now, I want to start talking about trade management. So, once you're in a trade, the rules are simple. I hold this trade until I see that the momentum changes, right? So every single time I get a blue bar, I'm going to continue to hold that trade unless uh, it either goes up into profit, break structure, which is what I'd want to see before I look to exit. I would want to see structure have to break at least, or me to go into any sort of significant profit, which to me I consider anything as like 2.5 to 3 is a significant profit. If I'm up in profit and at least that amount, I will close at the next hint of momentum that changes to go in the other direction. So until that happens, I will actually hold all of my trades until they hit stop loss, because this is not what I consider as enough profit for me to be looking to exit when the momentum change. I have to see what happens first. I have to let the market decide what it wants to do. Anyways, if this trade does its stop loss, this zone is still valid, and I'll still be looking to get back in upon the next confirmation. So let's see what actually happened here. Okay, so that first entry did not get the result we were looking for, but we're back in the zone. So what we're waiting for is our next confirmation, which is boom, right there. So we got another confirmation, and this is where you'd be getting in the trade. And like I said, guys, sometimes it'll take a loss, maybe even in some cases 2 losses before you find that winning trade. Okay, so now this trade goes into profit. Now, when I say break structure, before I look to exit, I want to see that the market actually breaks structure before deciding to take my next momentum exit. Because if I try to exit before that, the market can just want to had consolidated before actually making its move up. So this was that trade, right? And as long as I'm in profit here, right now, this is where I'm going to be getting to actually look to get out the trade. So I'm in profit at this point. I'm up 1 to 2.5. So yeah, I'm in this trade until the momentum dies. So as soon as I get that red bar, which I got right there, I'll be exiting this trade. And I have no reason to hold, even if sometimes I do decide that I hold even if I get a red bar, but in this case there's no reason for me to continue to hold because it's not like it's pulling back to any particular structure. So right here would be my exit on that candle. And this is what that first opportunity would look like. And the reason why I exit off momentum is because the market can do anything at any time. You never know how long the market is going to go in a particular direction. So a lot of times it makes sense to get out when you see that the momentum dies. And also look at what happened. The market decided to come all the way back down as it did. Okay. So let's check out our next setup. This is a double review here. So I also traded that same London session, and I sent this in the chat. I managed to sneak in this trade an hour after London opened. Here's what that trade looked like. So coming from the same trade, I'm going to break this down really quickly. So let's have a look at what happened, right? After we get a break of structure, okay, remember, after a break of structure, that's how we define our supply and demand zones. When we see a break of structure that came as a result of any impulse like this, when we see an impulse that breaks structure, that's how we know that we have an area where we could potentially be looking to trade. So a new demand was created. All that happened was this, right? And if, let's see, let's give it 1 second. So when I seen this, we were about right here. This is enough market data for me to determine that this is a, that this is a good trade to get into. Okay. So what I see here is the beginning of a pattern that I like to talk about. This is, I'm going to call it the inducement pattern, right? Although I'm drawing a harmonic pattern here, what I'm labeling is the inducement. Again, inducement is when you have an area of supply or demand and the market comes extremely close to that point, not quite touching it. Sometimes it can touch it, but the market comes extremely close to that point and then decides to make its move. However, this was a pseudo move. This is a move that was built to induce traders to buy, or to make traders think that the market is starting its uptrend here, right? Which means that a lot of people are going to have their stop losses right below it. And the market is a market that seeks liquidity. So this inducement was there to get people to buy into the trade and believe it's going to continue to go up. So what the market will do is it'll clear this area of inducement. Then it'll give you the entry that's valid for the move to go to the upside. And in this case, I labeled this zone as green is because this is a confirmed zone. I set a pending order here. And the reason why I was able to, the reason why I was confident setting a pending order is because I know that the market needs to manipulate and collect liquidity before making its move. This is the manipulation. This inducement that's being swept is the manipulation that was needed in order to collect the liquidity of traders that had their stop losses there to push the market up. So once I got in this trade, and I'll put that pattern back so you guys can see what I'm looking at, right? We get an impulse pullback, but the pullback doesn't quite hit the zone or point of interest. And then we get some sort of extension, and then it pulls back and goes below that B point to where we have our entry. So that's how when you see this, that's what that means. Now, simply, I held this trade until the momentum died. And let me see where that happened. At this point, I'm like extremely deep in profit. So there's no reason for me to be getting out of this trade. I'm going to let my winners run. There's no reason for me to get out of this trade unless the market decides that it doesn't want to go in my direction anymore. And this is when that happened, right there. So that's the end of my trade. Yes, I could set take profits, but a lot of the times when you're trading from these areas of supply and demand, there's a lot of liquidity here, and you don't know how much the market wants to give you. You never know how long the market actually wants to run in that direction. And sometimes I exit on the 3-minute time frame. If I'm really high up in profits, I'm gonna want to get out sooner rather than later. I think I might have exited this on the first sign of momentum dying here on the M3 time frame. So I took profit anywhere between here and here. Okay, so that's GBP USD. We're gonna continue to keep these very brief.